All right, let's talk about investing, specifically investing in the public markets. So this morning, Snowflake went IPO, one of the biggest tech IPOs of all time. Everyone's talking about it. Twitter's all the rage. And leading up to this and even after, I've gotten a whole handful of folks who have asked me just about advice about getting into investing in general. So how do we think about it? What do we do? Where do we start? And I've been investing since 2008, at least in the public markets. And I have a handful of thoughts in terms of where to get started specifically. And so when I really think about this, there's the traditional advice that's going to tell you, look at the markets in general, invest in the S&P or NASDAQ, you're going to get, kind of a guaranteed return over time. I'm going to say all that's kind of bullshit. I'm going to take a contrarian view like I usually do. And I'm going to say that, you can look at things like S1 statements or financial statements and they are what I would call transparently confusing, because in a financial statement, everything's there. Everything you could ever want to know about a company, its health, where it's going, where it's been. If you look at an S1, all the risks are there. Like anything you could ever want to know is there. But if you understand how to read these documents and comprehend them, you really don't need to be watching this video, and you're probably not reaching out to me for investing advice. So, while all the data is there, it is overwhelming, especially when you're just getting started. So what I want to talk about is not Snowflake, not Palantir, because what I would argue is if you have to Google what those companies do, if you've heard of Snowflake, but you had to Google it, you had to look on their Wikipedia page to see like what they do, and you had to go a couple pages deep to really comprehend it, just stop right there. Don't invest in this company. It's not a core competency of yours, and you already are 2 steps behind. So yeah, you might miss out. It might be the next big thing. Berkshire Hathaway 2.2x since it IPO'd. You might be able to 4x over the next 18 months, 2 years. But for this one, just watch from the sidelines. Be a spectator and know that it's better to have regrets on not making a whole lot of money than it is having regrets on losing a whole lot of money. So if you have to Google what the heck Snowflake does, how it makes money, what Palantir is, what it does, how it makes money, and then you have to go 1 or 2 levels deeper to understand sort of the cloud computing business, who the competitors are. If you don't already have this data readily available, it isn't sort of a core competency of yours, then just stop and be on the sidelines and know that that's okay. And so what I want to talk about really quickly is just my general thesis. Invest in what you love, especially when you're getting started. Now, what I would argue is find the things that you love, the products or the experiences that just are hands down better than anything else. Now, I'm going to just use myself as an example, and the iPhone, right? No better device in the world for me than the iPhone. I literally use this thing multiple times in a day, multiple times probably within 5-minute increments, right? And it now is the key to my car. It's the key to my house. I can't function without this thing. When I've looked at the competitors, and I've done it as a consumer, and I've looked at Android and whatever else there might be, nothing beats it. And so I invest in Apple. And my thesis is that I will continue to invest in Apple until the day that I don't believe that the Apple iPhone is the best device on the market. Now that's my own thesis, and that's my own love for Apple and why I love Apple. Now, so I want you to find the product that you love, that you can't live without. And it might be Netflix, it might be Tesla, it might be AT&T or Verizon or Coca-Cola or Kraft macaroni and cheese. But whatever it is, find the thing that you love, that you think you love it because it's superior to everything else that's out there. Nothing competes with it. And then I want you to write down and make a thesis for why that's true. And then what I want you to do is to evaluate for the moment until that's not true. So if I believe that Apple, bigger than the Mac, bigger than the Apple Watch, bigger than the AirPods, for me it's the iPhone. And the iPhone and the App Store and in the iPhone is what differentiates more than anything else. And that's going to be my thesis. And I'm going to work with that. And what I'm going to do is not look at their financial statements. What I'm going to do is not look at what their competitors are doing. What I'm going to do is constantly just wait for the moment until Marty is done with Apple, until Marty even thinks for a fraction of a second that there's something better than an iPhone. And that just hasn't happened since 2008. Sure, in 2007 is really interesting when it launched, but it was a game changer for me, at least personally. I loved my Blackjack that ran on Microsoft. But in 2008, the App Store came out with it, and then App Store combined with iOS with the iPhone was game changer, and I never looked back. And so, same thing with Netflix. I liked Netflix, and I loved Netflix, but I didn't really invest in Netflix until they brought back Arrested Development. And I saw that there was original content here. And I said, hey, this is something that nobody else can give me. And I consider this a differentiator. And so now my thesis for my Netflix investment is I keep putting more into Netflix until the day that I believe their original content isn't better than everybody else's. And that's it. That's my play. It's not their engineering talent. It's not their computing power. It's not how fast the servers are, their prices. For me personally, the thesis is 100% on the value that I put on it in its original content. So until somebody has more, better original content than they do, then I'll stop investing in Netflix. The other one is Twitter. Now, so Twitter I have a really interesting thesis for. It's a two-parter. One is that I believe fundamentally, at least right now in our culture, people love to complain. And they love to complain about brands and businesses. And they love to do it publicly. And the best place they love to do it is Twitter. And they think we have this psychological feeling that someone's listening, that someone's going to respond. I think we've all threatened to never fly a certain airline ever again. And now COVID, we're not. But we just think that, like, United Airlines is really listening. And they think, oh, if Marty threatens to never fly us again, we're going to change our entire policy just for this guy. But we all believe it and we do it. And so as long as that's true, I keep investing in Twitter. As long as there's an and here. As long as the best place to complain about Twitter is Twitter. And so far, that's been true since Twitter launched. There's no better place to poke fun at Twitter, to make fun of Twitter, to complain about Twitter than Twitter. And so the second that I find myself going to another outlet to talk about how bad Twitter is an amazing investment for me, and that's just my thesis. So all I'm imploring is don't follow the hype. Don't invest in things that you don't know. Look for the things that you love, the things that you believe are unbeatable in terms of their product prowess to you than anything else out there. It's the best thing you've ever experienced. If it's your Peloton or your Tesla, whatever it is, and then come up with the reasons why. And then I want you to invest in that for that reason. I want you to believe in yourself, invest in yourself, invest in the things and the products that you love, and believe that everybody else will love them also. And then I want you to create the thesis for why you love them. And I want you to constantly evaluate that. You don't have to do it daily, you don't have to do it monthly, but just constantly be on the lookout for when are you ready to replace your Peloton with something else? Or when the second that when you bought your Peloton, you rode it every single day. And then you notice that you rode it every single week, and then every single month. And then when that starts to happen, you realize you're not using it as much. Then realize that the market might follow, and then you'll start to sell your Peloton. And so, I use Twitter every single day, obsessively, probably too much. But the second that stops to be true, I'm going to start to question why. I'm going to start to look at where else I'm spending my time. And when it's not on Twitter, then I'm going to start getting rid of Twitter. And when I start using something else as much and as frequently as I use my iPhone, I'm going to start questioning my investments in Apple. But until then, I'm going to keep doubling down. And the same with Tesla. Until there's a better experience to transport me from point A to point B than that car, which I have not found since I've gotten that car for the first time, I'm going to keep doubling down on Tesla. And as soon as I see them keep improving the things that I love most about them, battery capacity, speed, performance, safety, I'm just going to put more in. All right, that's all I got. That's my investment 101. I think I'm going to do a few more of these, but that's where to start. Don't follow the hype. Don't go to Snowflake. Don't go to Palantir. Look in your cabinet. Look at the things you love that you consume. Look around your house. Look in your pocket. What are the things you're using every single day? The things you can't shut up about. The things that you absolutely love and believe in. And then just put your money where your mouth is and invest in them. All right. Peace.